We fizzled out and given up our early morning gains, so 10,700 is still holding by, but you're lying absolutely flat right now, 10 points in the red as we speak. The breadth as well has turned negative, so about 112 stocks standing to the declines to 75 odd standing to the advances right now. While yes, ICICI Bank may be holding out very well. There's Tata Elxsi, which is looking good. There's L&T Housing Finance. There's a Concor and BEML. But on the flip side, PC Jewelers gets out of the FNO ban, and now also the stock is seeing a good 12% downtick. There's HCC, Arcom, our Power, Innocent Bank. High beta continues to come off. But here's time for the profit question number 2, and the second question that we are asking is this Asian emerging market specialist. Join us on ET now at 9:20 a.m. This should be the simplest one to guess. Your option 2A is Adrian Movat. Option 2B is Rahul Chadha. Option 2C is Mark Faber. 2D, Nilesh Shah. So just send us your answers with PRF space 2A, 2B, 2C, 2D and send us your SMSs to 092434 92434. Okay, that's that on the profit question, but we should quickly take it across to Mubina as well. No, not Mubina just yet, but let's focus on textiles as a sector and find out really what is the impact of the weak rupee, considering this is positive for exporters as a sector. And let's try and gauge the impact really on the sector on all corners. So joining us right now, Neeraj Jain, the joint MD at Vardhaman Textiles, and we've also got on board with us Dr. Ajay Sahai, the DG and CEO at FIEO. Gentlemen, morning. Thanks so much for joining in. Welcome to ET Now. Dr. Sahai, if I could start with you, how is it that you see the recent rupee weakness impacting exporters as well as importers? And which sectors do you think the rupee weakness would benefit per se?
In fact, rupee has depreciated by around 6% the current financial year, or around 5% the current financial year, and overall 6% in the current calendar year. This will definitely help the competitiveness of the export, but always keep in mind that currency is one of the factors which makes export competitive. There are other factors also which are equally important. And coming back to the textile, I think we have to keep in mind that Indian textile exports are more sensitive to the demand rather than to the price segment, and therefore if the demand is not picking in the US and EU, and in fact in these countries we are losing out our share to other competitors like Vietnam, Bangladesh, Cambodia, Myanmar, we have to be little cautious. Rupee alone will not provide much comfort to the export sector. Definitely it will be one of the factors, and its impact will vary on sector to sector. So in sectors where the import intensity is high, for example gems and jewelry, petroleum, electronic hardware, or to high-end engineering products, there is naturally a natural hedge for those sectors, and therefore the rupee depreciation is more or less nullified. But for the traditional sectors like handicraft, carpet, sports goods, marine products, agro and process sectors, textile, footwear, where we have very low or less import intensity, they will definitely be gainer. So far as the imports are concerned, definitely imports will become costlier. There are issues with regard to the increasing trade deficit, current account deficit, and even the inflation. And therefore, while it is good for the export sector and those who are receiving the remittance in the country, the other segment of economy may be adversely impacted with this depreciation.
Jen, morning. And on the other hand, would like to understand what sort of impact the rupee weakness would have on your realizations, because I would guess that there is a direct linkage there.
Yeah, definitely it's beneficial for the exporting community, and it has in the short term it has a direct impact, because whatever is the depreciation happen, that gets fully converted into the top line over a period of time. I think there are some cost factors, some raw materials which will also get changed because of the rupee, but on the value addition part, surely it's a win-win situation for the exporting community.
So just coming to you again, how do you think textile industry or most of the industry would react? Okay, let's totally talk about the textile space. Do you expect this added benefit to be passed on for better market share, or do you think that the companies would retain this gain for better profits?
There are two factors. One is demand supply. Second is the uncompetitiveness. If we look at the most of the textiles players today, they are into, other than China, it's basically Vietnam, India, Pakistan, and Bangladesh. We are the four very large players in the textile sphere. If we go by the other countries' currency, for example, Pakistan has already moved from 104 to 115 in last 2 years. We talk of Bangladeshi from 78 to 83, 84 already moved. We talk of Vietnamese, so they've also moved from 2.21 to about 2.28. So whereas the India as such is still lower from 68 and a half, we are still reached at 67 rupees only. So it's not only a question of demand and supply. I think we were losing our competitiveness, and with the right rupee, which is competing with the other countries where the majority of the textile exports are, I think it becomes far more easy for the exporter to compete on the pricing as such.
Right, and in terms of demand, can you just tell us, so the one factor of course is pricing, what's happening with rupee. What are the other factors that will drive demand?
The demand as such is not much of an issue, but I think most of the countries we still find good demand, but because we were uncompetitive, so we were not in a position to export more quantities. But I don't think otherwise in terms of the demand, India or our other cost factors, India may not be in a position to compete. Yes, of course, if the rupee appreciates, all our costs in US cents, for example, power, wages, all those costs increase, where we become a little in competitiveness.
Right. Let's go across to the other guest as well. Ajay, what is the sense that you get in terms of competitiveness that needs to be done? So you said that rupee, of course, is one factor. It'll help in the current situation. But what are the other things that you would look at?
In fact, if you are talking about the textile sector, let us look at how we have performed over a last 10 years or so. In 2006, India's share in global apparel export was 3%. In 2016, we have increased it by 1% to take it to 4%. In the meantime, both Bangladesh and Vietnam, they have increased their global share to more than 4%. Their global share of Vietnam in today's apparel sector is around 5.5% and Bangladesh 6.4%. UNIDO has recently carried out a study which clearly demonstrates that over a period of time, India is losing its competitiveness, even in the traditional sectors of exports like apparel and textile. I think that while, of course, we should be happy with the depreciation of Indian rupee, first of all, I'm not sure how long it will last. Secondly, we have to use this time to address some of the fundamental issues, maybe relating to infrastructure, maybe with relating to skilling of worker. The relaxation in labor laws has happened. I think that will be implemented by state authorities in true spirit. The transaction cost for exports needs to be looked into. So this is the time where we should look into the long-term solutions for exports. Though of course, let us drive on the wave, and if it can provide competitiveness and better exports to better prospect of exports to India, we should be happy with that. But I personally feel that if we want the export to be on a sustainable path, we have to look into the core issues which are affecting India's exports and competitiveness of India's exports.
Right. Just wanted to understand, Neeraj, as to where things stand when it comes to Vardhman, because up until now, US has been the largest consumer for you. That's where your largest revenue pie comes in from. Help us understand that, given that your exports account for 40% of your total pie as of now, where is it that you would like to expand in further geographies? Where do you think could be the next big demand in terms of a driver could come in from, and which geography have you identified for that?
Most of our business is on the material side, so we are not the direct producer for the end product. So most of our products, whether that's yarn or whether that's fabric, this goes into the countries where ultimately the garmenting would happen. So US as such is not a direct consumer for us, or not a direct customer for us. But most of our material will go to countries like Bangladesh or to China even, and those kind of countries, South America, Honduras, Central American, where the ultimate garmenting would happen. So as such, Vardhman, there is the direct exposure to US is really less. So it's not really. Otherwise, in terms of the geographically, I think we already are exporting to almost more than 25 countries, which is very active, and another 10 to 15 countries where the small transactions, small business is happening. So pretty diversified in terms of the overall portfolio for the company.
Right, Ajay, just in terms of the overall export, where do we've spoken extensively about the textile space, but which sectors do you think are to watch out for, once rupee starts to depreciate or remains around these levels?
In fact, if rupee remain at 67 or little above 67, that all traditional sectors of export, textile, footwear, marine, agro-process sector, sports good, traditional sectors will gain a lot. Maybe pharmaceuticals and some of the sunrise sectors also, IT and IT-enabled services will be benefited. We will have little concern on sectors which have huge import intensity, particularly on electronic hardware, where we are still on a very nascent stage, and therefore we have to be little careful. But again, I will come back to the issue that when we are saying that we are having a very good share in textile export, and let me just give you an example. India's export of cotton yarn, where we were one of the leaders, is down by 40% to China. And in China's overall imports, India's cotton yarn share was 20%, has come down to 8% in the last 2 years. So let us be very conscious of the fact that there are countries who are becoming more competitive. They are providing better facility to their exporter. They are providing more facilitating approach to their whole export strategy. And therefore, if we want the Indian exports to be on a long-lasting path, we have to look into the core issues. But of course, the rupee depreciation will provide much competitiveness to the traditional sectors of exports.
Right, and in terms of the traditional sectors that you just spoke about, do you think any policy intervention will be needed to boost exports, or just rupee is sufficient?
No, I think policy intervention will be needed there. In fact, with the US raising dispute over the continuation of the export promotion scheme, there is a big question mark over continuation of these schemes. And I think government should have a fallback position that if something goes wrong, we should have something in place to support export, because a lot of support to export is given through export promotion instruments, and therefore their continuation in one form or the other, of course, that has to be compatible with WTO provision, has to be there. Therefore, I personally feel that while on the one hand we work with the government and the industry together for some of the replacement of these schemes, let us look at how we can reduce the logistics cost for Indian exports also. Our logistics cost is one of the highest. Number of initiatives have been taken. The government is looking into overall infrastructure improvement also. Lot of reforms have taken place in the road and shipping sector. We are now seeing that e-way bill has been introduced. We hope that the toll plaza at the borders will be electronic. And once that happens, I think road sector itself will be revolutionized. Thirdly, on the transaction cost, let us look into more input of technology into the government processing, so that the processing becomes simple and transparent. And even if we have we reduce our transaction cost by 50%, what is right now with the official data, I think we can provide 3 to 4% more competitiveness to export by reducing the transaction cost alone.
Dr. Sahai as well as Mr. Jain, such a pleasure speaking with both of you to try and get a 360-degree perspective on how the rupee weakness stands to benefit and impact exporters as well as importers. Good speaking with both of you.